When you go onto an investment platform and want to invest your money within an ISA or any investment account, then you will find lots of options or asset classes to invest in. It could be equity or shares, it could be a bond, it could be commodities like gold, silver, etc., or it could even be property or cryptocurrency. For someone who is just starting out their investment journey, all of these options could be quite confusing and they will struggle to find how to combine or mix and match all of these different asset classes to create a good, well diversified investment portfolio. The process of creating a basket of investment with a variety of these asset classes based on your own risk appetite, investment goals, and investment time horizon is called portfolio construction. In other words, portfolio construction is the art of building a balanced mix of assets to minimize risk and maximize returns. In this video, we will try to understand how to build an investment portfolio in the UK as an NRI if you are a complete beginner in investing. Hello and welcome to my channel. My name is Suman and I am a doctor working in the UK. On this YouTube channel, I share my own experiences of managing my own money as an NRI in the UK. I am not a financial advisor, so this video should not be considered a financial advice. I am simply sharing my own experiences and learnings about investment in a very easy way. If you enjoy videos like this, then please hit the like button and consider subscribing to my channel for more videos like this. When you are starting out your investment journey, then the first question that comes to our mind is why should we even try to combine all of these different asset classes in our investment pot? Why can't we simply buy one asset class, of course the one that has given the best return in last few years, and just invest all our money in that particular asset class? The answer lies in this chart. Let's look at 2018. You can see that cash has given the best return amongst all asset class, including equity, bond, real estate, and everything else. So based on this data, if you decide to invest all your money in cash in 2019, you will miss out the opportunity to make a lot of money. As you can see, the US equities gave a fantastic return of 31.6% in that year. So it's really difficult to predict which asset class will do well in future because nobody knows what is going to happen in the future. So a sensible strategy is to hold all major asset classes in your own investment pot. In other words, hold a well diversified portfolio so that whichever asset class do well in that particular year, you might get some benefit from it. That's why having multiple assets become really important in our investment portfolio. Now, if we consider a long-term view, then equity outperforms other asset classes. As you can see in this chart, which is showing the record since 1928, and S&P 500 has done better than other asset classes. By the way, past performance is not a reliable predictor of future performance. But my takeaway from this chart is that if I am investing for the long term, at least let's say 10 years, then I should go with equity to make the highest possible returns. So now we understand that we need a combination of various assets in our portfolio. In this video, I will mainly focus on wealth creation as the main goal of our investment journey. If someone is nearing retirement age, then their portfolio will look a lot different than what I'm going to discuss today. Personally, I invest for growth, so I can only talk about this kind of investments. Now, let's try to understand the asset allocation of a growth oriented portfolio. As discussed, equity should be the major portion of a growth portfolio. If you want to calculate how much equity you should hold in your overall portfolio, then a simple formula is 100 minus X rule. X being your age. For example, my age is 38 years. So based on this formula, I can allocate 62% of my portfolio to equities and the rest of the portfolio can be in debt classes like bonds. This is how you derive the classical 60-40 portfolio that you might have seen in various websites. As an investor, you can change this allocation percentage based on your own circumstances and risk appetite. But this is a good starting point for a complete beginner. So this is about equity as a whole. Now, equity also has various subclasses. For example, it could be US equity, it could be developed market equity as a whole, including US, Japan, UK, and other countries. It could be emerging market equity, which includes China, India, and other countries. Also, there will be various thematic options like technology focused funds, healthcare funds, high dividend yielding funds, etc. Now, if you want to keep things simple, then one of the reasonable option is to choose a global fund which will have a combination of all of these equity classes. That will be your equity portfolio. That one fund will be enough for your equity portfolio and you can keep it simple. Next comes the bond. Traditionally, bonds were considered safe investments, providing stability to your portfolio during stock market crashes. However, during the COVID-19 pandemic in 2021, this wasn't the case. Both stocks and bonds experienced significant decline together. But still, bond is an important asset class, and within this, you have the option to choose from government bond, otherwise known as gilt, which are actually safe options because government will likely pay their debt back. Another option is corporate bond, where you are lending money to companies. The corporate bonds might give you slightly higher returns compared to the government bonds. However, it comes with slightly higher risk of default. Now you might be wondering, this sounds so complicated. How can I do all of this asset allocation on my own? All this 60-40 and all these rules. Now this can be done quite easily by investing in a ready-made portfolio. For example, the Vanguard Life Strategy funds. BlackRock also have a similar mind map fund. The platforms where I personally invest, for example, InvestEngine have their managed portfolio and AJ Bell have their AJ Bell funds. So if you want to keep your investment journey simple, you can just choose any of this ready-made managed portfolio which are managed by experts. Usually when you go onto these platforms, they will ask you few questions about your risk appetite and your financial circumstances, and based on the answers that you choose, you will be suggested a portfolio that matches your risk appetite and your circumstances, and you can continue to invest your money in these portfolios. These portfolios are managed by experts and they will of course charge you a fee for this. Typically, these fees are not huge, and personally I am happy to pay this kind of fees for the convenience and the expertise of these fund houses. So till now we have discussed about equities and bonds, which should be the core portfolio for most investors. You can also add other asset classes like real estate, cryptocurrency on top of this. Most wealthy people will have a much bigger portion of their portfolio in real estate. If you want to hold a real estate within your ISA account, then one of the option is to buy real estate investment trust or REIT. REIT is a company that owns, operates or finances income producing real estate. REITs offer a way for individuals like you and me to invest in large scale income generating real estate without actually having to go and buy the property directly. They are a great way to diversify your investment portfolio and include some real estate income to that. You can hold REIT within an ISA account and invest a small amount of money to add some real estate in your portfolio. Next option is commodities like gold, silver, copper, lithium, oil and gas, and even cocoa, which has given mind-blowing returns in last 1 year. Gold is my favorite and I usually keep 5 to 10% allocation to gold in my ISA portfolio. Gold can be a valuable hedge against inflation, and over the last 1 or 2 years, gold is giving really good returns. So you may diversify your investment further by adding some gold in your portfolio. Last but not the least is cryptocurrency, which is a highly volatile asset class. Popular options include Bitcoin, but remember you can't hold cryptocurrency directly within an ISA account. It's risky, so some investors will allocate a small portion, like 5% of their overall portfolio, for cryptocurrency. Hopefully, now you have some understanding about asset allocations and steps to build an investment portfolio. Remember, diversification is the key. As you continue to invest, over time, you will develop an asset allocation strategy that you are comfortable with. So, in summary, start with a core portfolio including equities and bonds. This could be around 70% of your total portfolio. Consider adding alternative assets for diversification. If you are looking to simply get started, then having a single low cost, well diversified global equity fund is an option. Please watch this video next to know more about that. Thank you for watching. See you next time.